What's up, everybody? It's Omar. It is August 16th, 2018, and I want to make a video building a watch list for tomorrow. I don't plan a trade. I've just been so busy at work that I really don't get a chance to trade. But like before I leave to work, I usually look at what's moving and I'll map lines and I'll kind of look at my phone and see how things are moving. My plan is, once things settle down, hopefully things will be settled down for me by October, to be quite honest with you. To go on another vacation in another week. So, I've just been chilling. I'm itching though to get back to like trading, but it's just I got so much going on. The market's been pretty dead. A lot of things that are happening pre-market, but you're not seeing a lot of movement because most people like me, they take off the summer, they're just chilling. September is where it really kicks off, and October is where it gets really crazy again. So by October there should be a lot of action in the markets. So again, with building a watch list, what I basically do is I have my scans on Thinkorswim, and I get a lot of the same repetitive questions. If you go to my Twitter, you'll see that I do have on my Twitter, you'll see that I do have a link to my actual YouTube page, and you can click on the link and it'll take you to the YouTube page, and on there I have so many videos. I have over 100 videos, and so here's my playlist. I have an insane amount of videos. I used to tell you here, I think I have like 100 videos. But like the indicators that I use on my chart, I show you here. I show you how to if you go to this momentum trading fundamentals, I think I have like 13 videos there. How to create the scanners that I use and all that. It's all here. It's all here. I have so much stuff here that's so good that you can watch and learn and save yourself a lot of time. I posted something I posted this on Twitter, and I think you guys missed the point. My point was not I wasn't making a comment against the guy that owns this. I think he's Mir Barack or whatever the guy's name is. My concern is that some of you guys follow certain gurus, one in particular who really just irritates me because he's always preaching how everybody is a furu, but he's always that he was doing things for free, but now he charges because people who are free messed it up. So one, he charges you a lot of money, so that negates that argument. So, and two, he charges you for all kinds of bullshit, and then he tries to act like these TradeNet accounts that he sells on his site are like a deal that he's doing. No, he's selling you that so he can get a referral fee. So in my mind, I'm like, if this guy is always bragging, posting YouTube videos how he's making 200%, 300%, but never shows his brokerage statement, never shows his size share, never has a screen share, but nobody ever sees when he's actually executing trades, it doesn't show anything, you gotta think that the guy's not trading. And some people will tell me, well, he answers a lot of questions. Well, he's supposed to. You're fucking paying for it. You act like he's doing you a favor. So I don't know. I just be careful, guys. I guarantee you that everybody who's said that to me is still losing all their fucking money. So no guru's gonna make you trade better. You gotta just kind of go through the motions and develop a strategy, look for patterns and learn those patterns, and then just trade those patterns. Otherwise, you're just making somebody else rich. And I normally wouldn't have a problem with it, and I don't have a problem with gurus or learning, but I do have a problem when they lie, and they're lying to you, blatantly lying to you, acting like they're not doing it for the money when all they're doing it is for the money, and they're not even verifying their trade. So they're not trading. You guys are being duped, and it's just it's as clear as day, and it's really sad because you guys are I don't know. But you'll learn. A lot of you guys I know are young, teenagers, early 20s, live with your parents. You don't really understand many things about the world yet. You'll learn over time what I mean. But make sure that whatever room you're in, because I'm not opposed to being in a room. If I found a good room, I would join. But I don't see anything out there worth joining yet. Anyway, with that said, when you're building a watch list, guys, you know, you just want to look at honestly the biggest percentage gainers and losers. And then I have a low float scan. I just in the scan, it's just the criterias, and I have videos on all this too. I'll just pull it up for you just so you can see my criteria. Low float scan. Where is it? Low float scan. All right, here it is. So this is it. Let's look for stocks between 20 cents and $30. Volume between 3 million and 300,000, and there's really no max. It has 100 million, but I really don't have no max. Up 5% with a minimum of 0 shares. The max is 30 million, so the float is no more than 30 million. But really, you know, because anything really under 20 million is like really low float. I don't know why I have the mark here. I don't even know why that's there. But this is, you don't even need to put the mark. All you need is the last, and you can even change the percentage. You can make it 3%, 2%, whatever, and you get your scans, and that's what's here. So I look at that too. But basically, if you have Thinkorswim, it's nice because you can just literally click through each chart really quick to just get a glance of the charts. You know, what I like to do is I like to see the biggest percentage gainers and losers. I'll go to FinViz just because I know everybody doesn't have Thinkorswim. And you can just do the same thing. So stocks, so again, I go to screener, I click on all, and then I look for stocks. Generally, I start with stocks that are up 5% with over 1 million shares traded, and then I look for stocks that like closed, you know, up holding their highs with well above their average volume. So Tiva is one stock that I would look at. So I would type in Tiva here, and then I would just take a look. And this stock is on its way to my guess is going to 50. I think this stock is heading to $50. Let me just pull up the time frame. Let's do a 10-year day. So this stock was beaten down all the way down to $10. I was telling people to buy this back down there. Let me just clear all this. And it has a gap to fill all the way here at $27. I think it's gonna fill that gap. But I do think there's another gap to fill up here at $53. I think it's gonna get up there. You know, a lot of people are starting to be more bullish about the stock. I think it's a good long-term potential investment, but we'll see. Anything's possible, you know. But this is a stock that I would look at. So I would look to see what it's gonna do. And basically, like, you know, you guys know what I like to do. I like to start from the 15-minute time frame. Sometimes I'll go back 30 days just to see where it's been across the board, and you can see where support and resistance is. I'll zoom in here. This is the high right now, right? So you map the high, you map here. This is where there was a momentum shift. There was the previous high here, right? And then here is the high. So these are where the momentum shifts, and this is the previous day's high, even though it was pre-market. That matters. And then there's some support here. So these are the areas I would look at, and then obviously you can look at a lower time frame, like 5 minutes and 2 minutes, to see if there's any other areas you may want to call out. You see, like on a 15-minute time frame, you don't see these areas of support and resistance, but on a 5-minute you do. So you may want to then map these areas. So I would put lines here, but the 15-minute is always the stronger one because that's where it held longer. So you know, you can map your lines here, and then you can see how it is. Now what I like to do is when I see a stock trending like this, obviously if it broke 24.29, pull back and found support there and then starts to move, then that's a good buy, risking off that or the previous support level 24.14. You know, what you want to do again is you want to look on a bigger time frame to see, all right, where is the next resistance point? Well, the next resistance point above this would be right here at the 24.44 mark. So my guess is if it broke that, it'd probably hit that, pull back, probably retest this, and then if it gets enough volume, break this and keep going. And then the next area is 24.93. So if it held 24.44, there's a potential that this thing could run to 24.93, you know. So, you know, it's something to keep an eye out on. You could look to see, all right, what happened last time it held this. Look, last time it got up to a high around here, there was some consolidation. It couldn't break this level, and it broke down, came back, and now it's back to retesting it again. So, you know, Tiva is one of these volatile stocks. You know, you can look at it to see. You can put it on your watch list to see how it's gonna react tomorrow. and you know, that's sort of how I kind of what I do. I just look at stocks. I look for stocks that are holding the highs for a potential move up. So this may be on its way up, but before it moves up, a lot of times what happens is it won't break here, and then you see a big pullback, and then it kind of pulls back to like a previous support level where it had a big bounce, and then run again, or it goes back to like the previous breakout level, which would have been like here or here. But the big previous breakout level was actually down here. Well, actually no. Oh yeah, you know what? I mapped this, but it was really this. I'm sorry, guys. See? So let me move that, and this was the previous breakout level right here. So this level right here is 2296 level, is a level that could potentially pull back to. If it held, then you go long, risking that, you know. So that's sort of how I do it, you know. So I would put TIVA. Doesn't mean I'm gonna trade it. It's just something that I would keep an eye out on, you know. And then if I wanted to be really clever, I would then just put an alert, just so like if I'm not watching it, it would tell me. So I would just right click, create alert, and then I would just put an alert right there, so that way Thinkorswim will alert me if it retests that. The downside to this is that it doesn't work pre-market. For whatever reason, they never fixed it. I don't know why, but on pre-market the alerts don't trigger. Pre-market and post-market, it doesn't work. It only works during market hours. It's one of the downfalls, but it's free, so you know, what are you gonna do? You get what you pay for, right? So that is a stock that I would potentially look at. And Dust is running wild, DUST, so that's a stock that I could potentially look at too. So I would say, all right, Dust is up several days. Let me look at the ticker. Oops, sorry. So I'm looking at Dust. I actually mapped this yesterday. I had put it on my personal watch list. Not that I was going to trade it, but I put it on the watch list. Now let me show you what I mean about buying breakouts, right? So look. This is the breakout level. I mapped this yesterday actually, and when the stock opened, look what it did. It pulled back just about to the previous support level, right? Which I mapped here, 37.86. Now let me go back further in time so you can see. All right, I mapped that because this was and I think it's actually supposed to be 37.89. I mapped at 37.86. You know, I was just fooling around yesterday when I put this up, so I wasn't deadly accurate. But here it is, right? It got to a low of 38.02. They didn't get to that 37.89, but it got pretty close to it, and then it started moving. Now, the key is to bind the breakout. This is what Tim Sykes doesn't tell you. This is what Warrior Trading doesn't tell you. This is where they, to me, fail they failed the people that they supposedly mentor, is this. I always preach, and anybody who's followed me for a long time knows, I never say buy the breakout, because what happens is rookies, they see the stock break and they buy right here. They go in right here, right? They buy thinking that it's going to move up. But a lot of times the stock doesn't break out. It fakes out. It'll fake people out, and then it pulls back, and then it consolidates, and either it pulls back more or then you get the breakout. So if you notice, it pulled back, consolidated, right? Double bottomed here, found support, formed a higher low here, and then broke out. But the good confirmation is when it broke out on this candle, you see how it pulled back, but it finished above this, and then you get the volume spike, and then you see how it formed a higher low here. So that's giving you more confirmation that it's in a bullish trend now and not in a bearish trend. The bulls are in control at this point because it broke out, it held support, and then it moved on, and that's when the buyers really got in. That's why here, this is the rookies buying. This is the rookies that are buying. Here is where the smart traders are buying, because they're like, hey, you know what? This candle, and this is a 2-minute time frame. It closed. It closed higher than the breakout, than the previous breakout level, 40.97. And a lot of people are looking at this because it tapped this. But the smart buyers know that the real support is here. This is like the real breakout level that they're looking at. They're looking to see it hold there. So when they see it gap up, pull back, look what happened, right? Pulls back, it holds, then it bounces, then it pulls back, and it holds this. So that is bullish. That is telling you that it's forming clear support levels, and a lot of buyers, get in and they drive the price of the stock up. And that's when you buy, guys. You don't buy when a stock just breaks out. You want to see a clear confirmation before it moves. And you know what? If you miss it, you miss it. But that trading this way, the way I'm showing you, is going to save you a lot of money. because you're gonna blow up trading the other way. The way Warrior Trading teaches you and the way TID Sites teaches you is a way to lose all your money, because they don't really focus on technical analysis the way he just tells you. If you watch all his videos, every video is the same. Buy the breakout, short the breakdown. That's not how you're supposed to be trading. That's a way to lose your money. Why you think they spend so much money marketing? Because this is what happens. January you get 1,000 people. You got 1,000 new sheep, right? By April, those 1,000 new sheep are broke. They lost all their money. They say, fuck this, I don't want to do this no more. So guess what? He needs to replace those sheep. How you think he pays for those Instagram hoes? How you think he's traveling all over? It ain't trading. It's sheep's money. You know, that's what's going on. You know, so you know, you gotta wise up, guys. The best way to learn is to look at the charts and look at breakout charts and just save them and say, okay, let me see what happens when it breaks. Does it just break and run? Oh no, every time I notice, let's see if we can find another one. Let's see if we can find another breakout chart. But anyway, we'll put one up in a second. Let's pull up the UST again, just so I can show you where if you were gonna look to potentially buy this, you'll put this on your watch list. Let me move this. This is where I would be doing. So here it's some support, here is the resistance. I would be looking for a pullback come the open and see. So if it pulls back and it held support like this, $39 would be a great dip buy if it held $39, like if it pulls back. But and you can short the, like here you can short this 41.97 if it broke down here. But pre-market there's going to be a lot of action on this, so keep it in mind. But these are the levels that I'm looking at, and then here there's some clear support here. You know, it's not a valid volume, I still respect it. And then here's a high right here. So these are the levels that I would be looking at potentially trade this stock. So I put DUST. But let me show you again. Let's look for, and I'll put that there. Let's look for another breakout chart. So let me look through here. Let's look at all right, let's look at PETQ. Let's see if what happened here. Let's pull up PETQ. Oops. Yeah, this is where I look at a bunch of stocks. Let me put that there. PETQ. PETQ. Oops, I wrote it wrong. PETQ. All right. So let's look at the breakout here, right? So here's the high. This was the breakout. This is the high point yesterday, right? Let's look at a 2 minute. I use the 2 minute or the 1 minute time frame. Look what happens, guys. Okay, so here's what happens. The stock pulls up, and in this candle it breaks out. Now if this candle broke this, I wouldn't buy it. Why? Because it just rips like you don't know if it's gonna fake out. Now if it has a ton of volume, then maybe I may take a risk. But remember, you're taking a big risk. To me, the smart buy is what I usually do is I let the breakout happen, I wait for the pullback, and I wait to see if it's gonna test the area. And right when it tested this and held and started moving, this is where I would have bought, risking off this, because it pulled back and then it started to gap higher. That is when I buy the breakout. I don't buy chase breakouts because a lot of times they fail and they crack. This one happened to continue higher. But what I would have done is once it found its high and it pulled back, this is where I would have mapped to see, okay, who's in control. So once you get the double top right here, this is what another trick that I do, a lot of these guys don't tell you, is I buy a stock. Let's say I buy it here and this is the high. I already got my sell order here. So let's say I buy 1,000 shares here. I already put a sell stop here. So like the stock will set, like I already have it set so that when it touches, it's already selling and I get my full position size and I make maximum money. If you want to let a stock ride, what you do is then maybe you put 75% or half, or depending on how your risk tolerance is. But a lot of times I do that, especially when I go long. I'll buy the stock and I already have my sell price already set. So as soon as I buy it, I get executed. I see that I'm executed, and then I go to sell. I put the amount, I put stop, and boom, right, and I have my sell stop. And that's how I do. That's how I maximize my positions a lot of times too. Same way if I'm shorting, just to hold myself accountable. So let's say I'm shorting this stock, right? And what I'm looking at is, okay, where's the previous bounce level? So where it bounced? So I would map. Let's say I would have shorted here because I saw the double top and I see the reversal trend. So I go short. So what I'm doing is, okay, where's the next level and I'm looking at the next level, and this is the next level. It's a consolidation right here. So I already have my buy sign, right? Because if you're short, you're selling, you're borrowing from your broker, and then here, so I have my buy stop already set down here. And let's say if it goes against me, I just cancel it, and then I just, you know, buy, because let's say it turns back and it rips against me. And that's how I do it. That's how you get maximum value in your stocks, and you keep discipline where you get out. Because, you know, a lot of times you get greedy. For me, I have a price target. I set it, and I let it just, you know, sometimes if I feel good, like, and I'm up a lot, I'll cover maybe half, and I'll keep the other half and see how the other half reacts. But I always secure profit, guys. You should always be securing profit, you know. So a stock like this, you know, this is a stock that I would be interested in putting on my watch list, because look, right, it had a big move, but it gave a lot of it back. Now that doesn't mean that tomorrow it's not going to continue higher, especially being Friday. But you see, like, bulls and bears are fighting. The bulls are still winning, but not like much. So I'm curious to see tomorrow, maybe this has a nice wash. So maybe you see like a gap up to about this 36 level, and then it just fades. Boom, it breaks down here and it comes all the way back down. This could be a potential nice trade tomorrow. Now if it breaks and holds, then, you know, you can take it long. But I like, now what you don't want to see is like the sideways consolidation where the stock is not doing nothing. Like let me pull this PETQ. Let me put it on the watch list. Like a stock like Walmart. I think Walmart today, let me pull it up. Let me find a stock like this. Like, you want a stock where big volatility. We want to see big moves in prices so you make a lot of money. Like, I think I put a stock the other day at NEO, and I put it because I saw it gap down pre-market. So I saw it gap down. I thought it was gonna bounce up to a level and then continue to fade, but it didn't. It got to that level and it just went sideways like this. That you kind of want to avoid, you know. You want to avoid that. You want big price movements. That's why people like to trade the first hour, 2 hours, because that's where most of the volatility takes place, you know. So far we got these three stocks. Now I'll look for a couple of these low floaters. Let's see. JMU is a stock that, you know, it had this nice green day. It's well above. It traded 9 million shares. This is gonna be a great stock to short tomorrow, more than likely, because if it can't, like there's a lot of consolidation here with a lot of volume, so it's gonna need more volume to break past the 273 tomorrow. So what you might see tomorrow is a spike into into a consolidation area and then a fade, and that's why there's nothing to borrow with Thinkorswim. Thinkorswim's terrible anyway for shorting, but that's why a lot of people like trading these stocks, because there's so much volatility, and they're so predictable in the sense that they come back. This has got a gap to fill back down. This is gonna go back to this 114. It'll be here. It'll definitely hit this 140 level. I mean, it has a gap to fill here. I'm surprised it didn't do it. More likely it'll do it tomorrow. But this is the way I would map it. So I would map a line here, map a line here. If you have the Trade Zero account, you probably be able to find shares to short of this. And you know, because Trade Zero is great for finding shorts, but they won't allow Americans to do it. If you notice now, Stephen Dunks, all he does is short using Trade Zero because he can't get the shares in any American broker. Sucks. Americans invented the stock market, and they get the worst locates for shorting. It's terrible. So these are the areas so this is a big pivot point, right? Down here is a pivot point here. Let me fix this. I think let's see, right here. So there's a nice pivot point, gaps up here, pulls back, gaps up. This is a nice consolidation area right here. There's some consolidation here as well. Nice pivot point. Yep. So yeah, here's right here. Yeah, so these are the areas to me that are pretty strong, and then it found some support here, so I would just put that there just in case. So my guess tomorrow on a stock like this is, and unfortunately most people probably won't be able to short it because they won't have the shares, but unless this fades completely at the market open, you may see a spike, and then it'll consolidate somewhere in this area, and then it'll fade. We'll see what happens tomorrow. I'm gonna put it on the watch list. JMU. So I have 4 stocks so far. So I'm looking to see anything else, and I'm looking at here. Now normally I would go back to Thinkorswim. I mean you know, you can look at Finviz and just go through the charts yourself. but I'm just gonna use thinkorswim because I don't want to make this video too long. Now let me see, let me look at a couple of losers. Let me see if I can find a chart. I want to explain another chart that I love. I'm trying to say, see, the market is dead. It's not, look at all this, very little volume. I mean, it's not a lot going on. Let me see. This is a chart. I want to show you this. This is a kind of chart that I do love. So let me see, let me put up on the big chart. Let me put up a 15-minute time frame so you can see. Let me move this out. You see this move happened pre-market and the alert never went off. Sucks. All right, so let me move this. It's actually better. Yeah. So what happens is, this is a stock that, and this was yesterday after hours. It had this like big sell-off, and then in the morning it started gapping up. What I like to do is, these big candles, what I like to do is I'll put like my little lines here, right? Support and resistance lines, right? So I'll put them here and here, and right, because these are the two biggest areas. And then if you want, you can go like on a 5-minute time frame or 2-minute time frame. But to me, the 15-minute time frame to me gives me a nicer indication of where the real support and resistance is, right? So what I like to do is, this is what I love to see. I love to see these stocks spike and then get rejected and then fade. Look what happens here, guys. So this is very choppy and it's not a sexy chart, but I just want to prove a point. So watch this. Pre-market, the stock starts moving, right? The market opens. Let me put on a 2-minute, because if I was watching this, I would be watching this on a 2-minute or 1-minute time frame. Look what happens. Stock gaps up. This is the previous day's close price. It gets rejected. The previous day's close price acts as a resistance point always. All right, it's like a hidden resistance point. But look what happens, guys. The stock pulls back, right? So look, it pulls back to that resistance point that I marked on the 15-minute time frame. Look at this. It breaks below it, and look, it gaps up, and it can't break it, and then fades. I do this all the time, where I'll see the stock moving, and then what I do is I put an alert. I just add an alert there so that it create an alert. Oh, here it is. So yeah, so then what it does is the market opens, it breaks through, and then I wait to see how it reacts to that level. And you see here, it kind of consolidated and dipped low. Now it doesn't seem like much, but this went from 80.61 to 79.28 in 2 minutes. I mean, this is quick money, you know, like fast. Like, and me, I trade like 1,000 share increments. So these, I make a lot of money fast, you know. And you can see how, look, it gaps up and then it can't hold it. And then look at this fade, nice fade, all the way to from 80.61 to 78.36. That's 2 points, man. And if I put this back on the 15-minute time frame, let's see if that's a support level down here. I didn't map it, but look where it bounces off. Look at this. This is a 15-minute time frame. Look, right in this level. Look at that. Look at that. And then that's where it bounced and moved. That's why it's important to map your support and resistance levels, you know. And I love to look at charts like that. I love it, love it, love it. When I see those big tanks pre-market, I'm already mapping the levels just to see how I'm gonna play those bounces. There's no there's not no good charts here. These charts suck, man. Look at this. This is shitty. I mean, the market is dead, man. I mean, there's plays, don't get me wrong, but it's not like it normally is, you know. The higher price stocks is where more of the action is these days. Yeah, so I mean, you know, so far I got these 4 stocks. Let me see if I'll add one more. Here's another example, right? So this is the 16th. This is today, right? So this, I'm mapping this. Now you could when you get a stock that rips like this pre-market, you're gonna get a fade, man. Especially look at this chart. Look at all this. That means bag holders are all this. People that were in this stock since $8 are fucking underwater. So any little spike, they're just trying to get out, man. They're not even holding through. That's why you see the gap up and then the fade. But what I would be doing is, right, so let me pull up the 15-minute chart. So I would be looking to see where the support and resistance is, right? So here you find this is the support level, and then it gaps. This is another resistance level. I would map these levels all in the 15-minute time frame because there's not a lot of volume. So 15 minutes would give me a good indicator of what's moving, right? So I see all this, right? So now when I'm ready to trade and the market's ready to open, look, the stock is already fading, right? So it starts fading, and look at this right in here. Look, it consolidated, it spikes, it can't even get there. Look at it, it gaps up, can't even hold this. And look, when it gets that pop, but it can't get back, now it's really acting as resistance. And right in here, if I had shares available, this is where I would have shorted and just held, because you know it's gonna fade. And look at this thing fades, and look where it bounces. It bounces right around this consolidation level, even though this is like, you know, no volume, but it's right in this consolidation level. Here you have some support here, and you have some support here. So this is where it kind of shorts covered, because they saw this is the support level. That's why they covered, and you got that little shitty spike. But I'm just trying to show you how you map your support and resistance levels, and then you get an idea of where to take the trade, you know. And that's kind of how I do it, guys. I mean, you know, I can get a lot more detailed about how I look for stocks. You know, RVLT, look at this. This thing is up. It doesn't have a lot of volume, but it's up. I'll put it on the watch list just because it's up. We'll see how it acts pre-market tomorrow. But what I usually do is sometimes if stocks are dead like this, I'll lower the change from the open, and that way I can see more stocks. And you see, it gives me more stocks. So look, like CTL wasn't there before, so then I can look at other stocks to find potentially other plays. And look, there's a stock that's holding its highs, and look, this thing had 5 big green days. I mean, you gotta think it's gonna wash at some point, so you may want to watch it to see if it's gonna wash tomorrow. Maybe tomorrow will be the first red day, because people are gonna take profit at the open because it's had so many green days. You know, that's quite possible. You know, and you can look for stocks that way. Another way that I look for stocks is if I don't. Oh, CVS is definitely something you should have on your watch list for sure tomorrow. I don't even know why. CVS for sure. This stock is the next eye. This stock is gonna wind up at 20. I may even take a swing at, not CVS. I'm sorry, CVSI is what I'm talking about. CVSI. It's a stock that, yeah, that's been on the run. It was on my watch list too. Yesterday. This is a stock that I would definitely put on your watch list. You know, you can map your support and resistance levels as well, just to track it. The point that I was gonna make was, I'm sorry guys, is sometimes I'll look at, instead of looking at like this, I'll look at, okay, give me stocks that are like where is it? I'm trying to find what I'm looking for. Where is that damn thing? Performance. Yeah, here it is. I go to performance. They got performance and performance too. I don't really know what the difference is, to be quite honest with you. But let's say I'll look for, instead of maybe, so I don't find anything for the day, I'll look for stocks that, let's say maybe he's up 20% for the week with a volume over 1 million shares, and it gives me these stocks. And then I do the opposite sometimes. You know, I'll look for stocks that are down 20% for the week, or for the month, or whatever, for the quarter. So up 20%. Let's look for negative 20% for the week. And I'll look for stocks that are down, and then potentially look for those stocks and see how I want to potentially buy. NUGT, man, this is gonna be a great buy. I would look to see where the bottom is and swing it, because let me tell you something, this is gonna go right back up, because when the market really fades, because it will, you know, the gold's gonna be on the upswing, and you can make a lot of money swinging this. So keep an eye out for those gold stocks. That's what I do, guys. That's what I do. If I did this in its full entirety, this video would be a whole lot longer. But these are some good stocks that you could potentially watch for tomorrow. I didn't really map the CVSI for you guys. But again, all you need to do is pull up the 15-minute time frame. And I already had these mapped because I've been, like I tell you, I track stocks even though I haven't been watching, just to see how they're reacting. And this stock, to me, is acting just like I has been acting in here. So if you look at that chart I, and I've been mapping this has been running I, and if you look at the long-term 1 year, it's acting just like I. And look what I was. I remember it was $2, and now it's $25. If we look at here. Oops, I put I here. Here, same scenario. Look at this. This shit was $1. It's now it's at 34.50. That's insane. Oh, back to 25. I actually had a friend. I told a friend to buy. He does options, and I told him to buy a put on this day when it was at 30. And the reason why, because there was an offering, and I said this is gonna give back a lot of its gains. Now it got close to that pre-breakout level of $24. It's hope, but it's still not sure which way it's gonna go. If it breaks below this thing is gonna really tank. It's gonna get back down to 18 bucks. You know, but then when you look at CVSI, it's like doing the same thing, you know. So it looks like it's in that. This thing was 14 cents. My God, it's crazy. So you know, it looks like it's doing the same thing. So keep an eye out. I think this could be a potentially good swing. So that's pretty much it, guys. I hope you found this helpful. Remember, just look at the patterns. Look for patterns. You know, I'll make more videos focused, like go into more detail about patterns and stuff like that. I have some great videos on my page. If you go back, one in particular, I think it's like the best, one of my best videos. I think I did it for, what was it for, like March. I think it was for March I did it.
It's Omar. It is March 1st, 7:08 p.m.
Yeah, this is it. This video, I mean, go short after first day into resistance. I mean, it's called, otherwise known as a bounce short. Man, this video, I mean, I really break it down. This is such a good video. It really is, because this one strategy, you can really make a whole career making money off this. I'm not bullshitting you. It's a great video. I highly recommend it. But other than that, man, you know, I hope everything's well, guys. You can, you know, I know a lot of you keep in touch with me on Twitter. Feel free to DM me. I think eventually I'll add a Discord room. I'm thinking about doing some other things. You guys tell me if you have interest. I may start a service, but not like the other guys, where be more like classroom after hours. And you know, we'll review trades and talk about strategy and setups and what we're looking at, why. And then I would be like, you know, try to do some pre-market stuff when I can. You know, I'd work, so that's why I can't commit to like a full day service. But there's a lot of these gurus, they're not on the market all day. They're there like maybe an hour and then they leave and all that kind of stuff. So you let me know. All right, guys. So anyway, just let me know what you think. You know, track your trades, and if you have any questions, let me know. I hope everything's well, guys. Have a good evening.